Stock markets are hitting new highs, and you hear talk of de-escalation between the US and China. On the surface, things might look fine, but just beneath, a seismic shift is happening. Central banks are hoarding gold, and the world's smartest money is piling into tangible assets. In the last few videos, we talked about confidence hedges, liquidity assets, and why gold and silver are being rehired for new jobs. Now we're going to answer the question behind all of it. Why is the system fracturing in the first place? They see a global financial system fracturing under the pressure of sanctions and debt. Let's get right into why this geopolitical chaos is creating the biggest rush into gold and silver we've seen in a generation. For the better part of a century, the world ran on a single, unified financial system, with the US dollar as its foundation. For all its flaws, this system created a predictable world for trade and investment. But today, that system is cracking apart. We are living through what can only be called a great financial fracture, a tectonic shift that's splitting the world into competing economic blocks. At the center of this split is the escalating rivalry between the United States and the rising BRICS nations, led by China and Russia. This isn't just a trade tiff, it's a fundamental fight over who writes the rules of the global order. For decades, the dollar's dominance gave the United States incredible power. Most global trade was priced in dollars, central banks held dollars as their main reserve, and almost every international payment flowed through American banks. This gave Washington a devastating weapon: sanctions. By controlling the system's plumbing, the US could cut off countries from capital, freeze their assets, and completely isolate them from the world economy. Then came the full-scale invasion of Ukraine. The West moved to freeze nearly half of Russia's $630 billion in foreign reserves and kick its banks off the SWIFT payment system. This was an unprecedented move against a major world power, and it sent a shockwave through every capital city outside the Western alliance. What was the message? If it can happen to Russia, it can happen to anyone. Your reserves, your investments, your access to the global economy, it's all conditional. Suddenly, the invisible glue holding the dollar system together, trust, began to dissolve. Nations that feared they might one day end up in Washington's crosshairs started desperately searching for an alternative, a way to operate beyond the reach of the dollar. This fear, this death of trust, is the key driver behind the historic shift we're seeing right now. It's why countries are methodically building a new, multipolar financial world where the old rules just don't apply anymore. This high-level geopolitical drama might feel distant, like a game for presidents and central bankers. But the fallout from this great fracture is a direct threat to your wealth, your savings, and your financial security. The splintering of the global system creates instability, and that instability is being paid for by devaluing our currencies. Think about it. In response to one crisis after another, governments have unleashed astonishing levels of spending and debt. This isn't free money. It's a hidden tax on your savings, a slow, quiet erosion of your purchasing power. As market veteran Ed Yardeni pointed out, the recent surge in precious metals is tied directly to concerns about the excess stimulative effects of US monetary and fiscal policies. In other words, the smart money is getting nervous. And when the smart money gets nervous, you need to watch where it flows. The most sophisticated investors on the planet, the central banks managing entire nations' fortunes, are making their move. In 2022, 2023, and 2024, central banks went on a historic gold buying spree, snapping up over 1,000 tons annually, a pace not seen since the 1970s. While the pace has slowed in 2025, likely due to record high prices, the strategic shift is undeniable. This isn't a speculative bet, it's a fundamental change in strategy, a clear signal that they're losing faith in traditional reserves like the dollar and are running to a real, tangible asset that no single government controls. The epicenter of this movement is the BRICS bloc. These nations now control about half of the world's gold production. Between 2020 and 2024, they were responsible for buying more than half of all gold sold globally, steadily dumping their US dollar assets in the process. Their combined official reserves are massive, with Russia holding over 2,300 tons and China reporting over 2,300 tons. And with China, many analysts believe the true unreported number could be more than double the official figure, potentially exceeding 5,000 tons. Why are they doing this? Russian economist Yevgeny Biryukov said it plainly. Gold is a tool to protect against sanction risks. They see the dollar being used as a weapon and know their economic survival depends on having an alternative. And while the dollar still dominates trade, its foundation, trust, is crumbling. The world's biggest nations are building an escape hatch, and they're building it with gold. This isn't some far-off risk. It's happening now, and it's fundamentally changing the meaning of money. The public is getting anxious too. In late 2025, Google searches for dollar debasement hit record levels, a clear sign of widespread concern. So as trust disappears, where is all this money going? Not into stocks or bonds, but into something much older, and also into new systems designed to bypass the old one. The BRICS nations aren't just stacking gold in their vaults. They're trying to integrate it into a whole new financial architecture. On October 31st, 2025, a groundbreaking pilot was launched for something called the Unit. It's a new digital trading instrument, a prototype for a settlement currency for trade between BRICS members. Its design is a direct answer to the problems of the dollar system. The Unit is backed by a basket of assets, 60% by the national currencies of BRICS members, and the other 40% is backed by physical gold. This is a huge development. The gold isn't just sitting there. It's designed to act as a monetary anchor, providing trust and stability where the other currencies might be volatile. It's a way for, say, Brazil and India to trade without ever touching a US dollar or exposing themselves to US sanctions. Now let's be real about this. The Unit is still just a pilot project started by a Russian research institute, not the official policy of the entire BRICS bloc. There is no single BRICS currency coming to kill the dollar tomorrow. Key members like India have pushed back, with its external affairs minister stating clearly that de-dollarization is not part of India's financial agenda. The challenges are massive. The dollar still accounts for around 89% of all currency trading, and US financial markets are the deepest in the world. But focusing only on the obstacles misses the point. The goal isn't to replace the dollar overnight, but to build an alternative that reduces its power. It's about creating financial independence. The Unit pilot, along with other experiments, tells you everything you need to know. Backed by the largest gold purchases in 50 years, the message is clear. The future of finance is fragmented and increasingly reliant on hard assets. Navigating this new world demands a different way of thinking about your money. The old rules are being torn up. If you want to stay ahead of these world-changing trends, now's a great time to click that subscribe button and ring the notification bell. We break down these complex shifts every week to help you protect and grow your wealth. In this fracturing world, what makes gold the ultimate solution for both nations and investors? It all comes down to one powerful idea. It is a non-counterparty asset. Every other financial asset you own, a stock, a bond, even the cash in your bank, is really just a promise from someone else. A stock is a claim on a company that could fail. A bond is a claim on a government that could default. Your bank deposit is a claim on a bank that a government can decide to freeze. Gold is different. Physical gold is an asset that is nobody else's liability. It can't be printed into oblivion by a central bank. It can't be defaulted on. And, crucially, it can't be easily sanctioned or frozen if you hold it yourself. This is why central banks are buying it in record amounts, not for short-term gains, but to secure their national sovereignty. The rally in 2025, which saw gold surge over 70% to hit all-time highs above $4,500 an ounce, wasn't driven by normal market speculation. It was driven by this deep structural shift in the global order. This move to gold is playing out in two key ways. First, it's geopolitical insurance. For any country wanting to protect itself from the weaponization of finance, gold is the only truly neutral reserve asset. Second, and maybe more importantly for the future, it's becoming the monetary anchor for the new systems being built. That 40% gold backing in the BRICS unit pilot is the perfect example. Gold provides the trust and stability needed to launch a new settlement system outside the dollar's orbit. In this sense, gold is transforming from a passive safe haven into an active, vital piece of infrastructure for the new multipolar financial world. Investors flocking to gold aren't chasing a bubble. They're following the lead of the world's most powerful financial institutions. While gold is leading the monetary charge, it's not the only metal taking off. In fact, 2025 saw an even more explosive rally in its sister metal, silver, which surged by around 150% to trade above $75 an ounce. This incredible run highlights the second major theme of this new era: the collision of monetary security with critical industrial demand. Silver plays a unique dual role. Like gold, it's been money for thousands of years and is a trusted hedge against currency debasement. Many investors who feel priced out of gold turn to silver to own a tangible monetary asset. But unlike gold, silver has a massive and rapidly growing industrial side. It's the most conductive of all metals, making it irreplaceable in modern tech. It's a key component in semiconductors, electronics, and especially in the green energy transition. Silver is essential for solar panels, and the global push for renewable energy is creating a structural demand surge that has nothing to do with its monetary role. This creates a powerful 1-2 punch for investors. You get the safety of a monetary metal combined with the growth potential of a critical industrial commodity. Then you have platinum, which also saw a massive rally in 2025, jumping by nearly 150%. Platinum's story is all about industrial scarcity. It's a key catalyst in automobiles for reducing emissions. But looking ahead, its biggest role may be in the emerging hydrogen economy, specifically for fuel cells. As the world scrambles for new energy sources, platinum's importance is set to explode. This, combined with a fragile supply chain concentrated in just a few countries, makes it a powerful scarcity play for investors who see where the world is heading. This brings us to the most important takeaway for your own strategy. For decades, the playbook was simple: diversify across stocks, bonds, and commodities. But that model was built for a stable world. That world is gone. In today's fractured landscape, you need a new playbook: investing by function. This means you don't just buy metals. You buy specific metals for the unique job they do in this new geopolitical environment. Think of it like this. You own gold for its primary function as your personal, sovereign insurance. It's your direct hedge against de-dollarization, sanctions risk, and currency failure. It's the bedrock asset of central banks, and it should be yours too. You own silver for its dual function. It's your monetary hedge against inflation, and it's a direct investment in the explosive growth of the green energy revolution. It gives you a unique combination of safety and growth. You own platinum for its function as an industrial scarcity play. You're investing in its critical role in future technologies like the hydrogen economy, while betting on the supply chain disruptions that are almost guaranteed in a world where access to resources is a weapon. This logic extends to industrial metals like copper and lithium. Investing in them is no longer just a bet on global growth. It's about geopolitics. Capital is flowing to projects in safe jurisdictions, allied with the West, as a hedge against trade wars and resource nationalism. This is the new game. It's about understanding the world has split, trust in paper assets is dying, and real, tangible things with critical functions are becoming the ultimate store of value. The ground is shifting beneath the global financial system. The unified, dollar-led world of the last 50 years is breaking apart into a more fragmented, multipolar reality. This isn't a temporary crisis. It's a deep structural transformation driven by geopolitical power struggles and a rapid loss of faith in government printed money. The world's smartest money, the central banks, are responding in the most logical way possible by dumping counterparty risk and running to the timeless security of gold. They aren't just hoarding it, they're starting to build the framework of a new financial system on top of it. The incredible rallies in gold, silver, and platinum in 2025 were not a speculative craze. They were a rational repricing of value in a world that is becoming more chaotic by the day. The slow drift towards safe assets has turned into a stampede. Geopolitical tensions are now the main force driving markets, pushing investors toward things that promise stability over speculation. For anyone with savings, the message is unavoidable. Geopolitics is now the most powerful current in the financial markets. Understanding this great fracture and positioning yourself with the tangible security of hard assets isn't just a defensive move anymore. It is the essential strategy for protecting and growing your wealth in the years to come. To make sure you stay on the right side of these historic trends, be sure you're subscribed with notifications turned on. Thanks for watching.